Over the last few years, inflation has been a big topic in the news and just in people's everyday lives. And at a high of 9.1%, it's easy to understand why people were upset about the high inflation. But people tend to be upset about most inflation numbers. So in this video, we're going to discuss why people hate inflation so much. So the first thing we need to do is look at what inflation is, and we'll do a quick rundown in this video. I'll have a link to our inflation video in the description or up top, so you can go ahead and watch those for more in-depth information. So inflation is just an increase in prices. And we measure this a bunch of different ways. We take a weighted average of a basket of specific goods. We can measure inflation of the price of vehicles and energy and gasoline, all sorts of different things that measure inflation over time. The problem with inflation is if everything stays the same and only prices increase, people are worse off because their purchasing power decreases. And that's really the key here. If, say, prices increase by 1% and wages also increase by 1%, then people are not better off or worse off. Their purchasing power stays the same. But if prices increase by 1% and wages stay the same, they're worse off because their purchasing power decreases. It takes more money to buy the same things as before. So let's say I make $100 a month and pizzas cost $10. I can buy 10 pizzas in a month, but now let's say that the price of pizza increases $1 to $11. Well, now I can only buy 9 pizzas, and maybe I'm a little bit healthier, but I'm worse off because my purchasing power decreases. And that's the problem with inflation. If wages don't increase at the same rate of inflation, that's where people get upset. And that should make sense. If only prices are increasing and wages are staying the same, people are worse off and their purchasing power decreases. The problem, though, is that wages have been increasing with inflation, and we can look at the graphs to show that. Looking at the graph, we can see that wages have been increasing. Now, this is nominal earnings, so inflation is ignored. But if we look at real wages, which is wages adjusted for inflation, we see that wages are still trending up, just at a slower rate. Now, it is important to note that this is looking at the median wage. Not everyone's wage has gone up. Your wages may not have increased, and I understand that. Not everyone's wages increased or at the same rate of inflation. But if we look at the economy as a whole, most people are not much more worse off than they were before. So now let's discuss why people dislike inflation so much. And if your wages have not kept up with inflation, it's a pretty obvious reason, and it's an acceptable reason to dislike inflation. But what about everyone else whose wages have increased at or even above the rate of inflation? So I think there's two real reasons why people dislike inflation so much. And the first one is that people just don't understand inflation very well. We just looked at two different charts that show that inflation really isn't doing too much to people's purchasing power. Their wages are increasing at or near the rate of inflation. And people don't go out and look at charts every single day, or they don't measure their purchasing power every day. They typically read the news or watch the news or hear from friends, and that's how they form their opinions. It's usually emotional responses. Now, we can look at CPI and we can see how these changes occur over time. It's important to note that prices change at different rates for different things. So if we look at consumer price index for all items, we do see a peak, and now it's coming down back to pre-pandemic levels. But if we look at gasoline, prices were going down for most of 2023. And it's the same thing with energy. the charts look similar to pre-pandemic levels. And if we look at something like, say, medical services, prices have been deflating, which they haven't done since the graph started. People also tend to focus on things that they consume often, food or maybe even clothing. But things like, say, car insurance or home insurance or health insurance, people tend to not really focus on that because they're longer term investments. And that's important to note because when you look at small time frames versus long time frames, your view can change. If you're looking to purchase a car in, say, November 2020 or April 22, during that time frame, you have a much different view on the new vehicle market than, say, someone who was looking at vehicles from April 2020 to today. The short-term time frames and the long-term time frames are very, very different. And that's important to keep in mind when you're looking at trends over time. The last point is, inflation typically means that we're in a healthy economy. Inflation means that people are out purchasing things, which means that we have job growth and, like we've seen, wage growth. An economy is good typically when we see some inflation. And the opposite is deflation, when we see prices going down, which is typically what happens in recessions, which is where people lose jobs or lose wages and they can't afford their homes or food or things like that. So a little bit of inflation is a good thing, especially compared to deflation. I think the second big reason that people dislike inflation so much is negativity bias. Now, negativity bias is when two things happen with equal value, one's positive and one's negative, people tend to focus or put more emphasis on the negative thing more than the positive thing. In the case of inflation, if someone's wage increases by 2%, but prices increase by 2% as well, that person will dislike the price increase more than they will like the wage increase. But their situation did not change. If we go back to our pizza example from earlier, and a person makes $100 a month and they buy 10 pizzas for $10, if pizza goes up by $1 and the person makes $10 more, they would still be able to purchase 10 pizzas. They are not better off or worse off than they were previously. But negativity bias would show that that person thinks they are worse off. If we go back to real wage, we can see that the median real wage has been increasing. But if you ask most people, I bet most people would say that they are worse off than before. And yes, some people are worse off, but most people are not worse off. And I think if you ask most people, they would say that they're either worse off when they're not, or they're much worse off than they actually are. Okay, so what can people do about it though? Well, first, just understanding that people have a negativity bias. The second thing is just do some comparison. Take your current wage and see how much it's grown from a year ago or 3 years ago or 5 years ago, and then compare things like, say, milk or eggs or bread, things you buy on a weekly or monthly basis. And also compare to, say, the gas price or your electric bill or your car insurance or mortgage, and see how much of your income you were paying towards those things. The other thing you can do is just be a mindful consumer. So we saw earlier that the prices of things change at different rates and at different times. So if you typically go to the store and you buy bananas and the price of a banana increased, well, look and see what happened to the price of apples or oranges or something else you can substitute for the bananas while the price is a little bit higher. The other thing is, if you're buying a big purchase, say like a new vehicle, look and see, has the price been increasing over the last, say, 12 months? And if it has, just look and see, can you hold off on buying a new vehicle And if you can't, maybe you need to go to a smaller, cheaper vehicle, at least for a short amount of time when prices kind of come back to normal. At this point, we've gone over inflation, we've looked at different charts showing inflation, and we've gone over a few things you can do when inflation is occurring. Hopefully you've picked something up, and if you did, make sure to like and subscribe. And remember that what people are saying and what the data is showing, maybe not, and usually is not the same thing. So make sure that you're looking at the data and not just listening to what people say. Thanks for watching.